Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 AI stocks that aren't Nvidia. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The AI industry has been booming these past couple of years, and dominating that industry has been Nvidia, who has seen some exponential growth this past year. So it is hard to look into the AI sector without their stock coming up. But today we figured we'd look at some other tech companies that stand to benefit from this AI revolution. These 3 companies all come in with unanimous strong buys from Wall Street. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the link down below. Now let's get into our 3 AI stocks. First on our list today is a company called Intapp. They trade under the ticker INTA and are currently priced at $39.76. Over the past year, they have had some ups and downs and have come out fairly flat, down 0.25%, but have climbed up 6% in the last 3 months. They do currently score a 10 out of 10 on the TipRanks Smart Score. Intapp is a provider of industry-specific software solutions for the professional and financial services sector. They help professionals unlock their team's knowledge, relationships, and operational insights to increase value for their firms. Using the power of applied AI, they make firm and market intelligence easy to find, understand, and use. Professionals can apply their collective expertise to make smarter decisions, manage risk, and increase competitive advantage. The company hosted an investor day just last week where they announced new vertical AI capabilities. The company's new intelligence applied strategy and branding reflect their dedication to applying AI into the specialized workflows of professionals within the accounting, consulting, investment, and different industries. They said that they're applying the promise of generative AI to create solutions that professionals use every day. Intapp also announced their plans to acquire an AI software company called Delphi. Delphi is a Berlin-based AI software company specializing in applied AI for firmographic data automation, structuring, and intelligence. They're hoping to close the deal in the next 60 days. The company shared their Q2 earnings report on February 6th, where they did come out with an earnings beat. For their Q2, the company reported earnings per share of 11 cents, coming in 5 cents ahead of analysts' expectations. The company saw total revenue of $103.9 million, which grew 23% year over year. Several analysts reiterated their buy ratings and increased price targets following that earnings report and their inaugural investor day. One of those came from Bank of America Securities. They noted that their investor day showcased the company's comprehensive go-to-market strategy and the use of artificial intelligence to enhance customer experiences. They said that the company's execution since their IPO has been well received, and the expectation is that the company will continue this trend of positive performance moving forward. With 9 current analyst ratings, the Intapp stock has received unanimous buys. The average price target comes in at $50.44, which would be an upside potential of 26.8% from current prices. Down below, looking at our recent ratings here, all of them in the double digits. On the low end, we have 3 price targets here at 18% upside, and on the high end, we have a 43% upside from Citi. Second on our list today is Synopsys. They trade under the ticker SNPS, priced at $576 per share. They've seen some impressive growth of about 57% in the past year and about 5% over the last 3 months. They do score an 8 out of 10 on the TipRanks Smart Score. Synopsys provides tools and solutions to the semiconductor design and manufacturing industry. They are a provider of electronic design automation, or EDA, software and associated services. They provide a wide range of solutions, including AI and machine learning, application security testing, silicon lifecycle management, and software supply chain security. Their Synopsys AI is the first EDA suite to harness the power of generative AI across the full EDA stack and fuels next-level timed results for advanced chip design. Just today, Synopsys launched the industry's first 1.6 terabyte Ethernet IP solution. This will help meet high bandwidth needs of AI and hyperscale data center chips. They released their Q1 earnings report last week on February 21st, where they did come out with an earnings beat and double-digit revenue growth. For their Q1, the company reported earnings per share of $3.56, coming in ahead of the $3.43 anticipated, and revenue came in at $1.649 billion, and that was up about 21% year over year. Their president and CEO said that the first quarter marked an excellent start to the year with strong execution across the company as artificial intelligence continues to drive their customers' investments in silicon and systems that position them for future growth. One analyst from Needham weighed in on the stock following their latest report. They noted that the company has exhibited a prudent financial strategy by enhancing their fiscal year earnings per share guidance, and that looking forward, all eyes will be on their Investor Day, which is expected to provide valuable insights into the company's long-term vision. The event is anticipated to clarify Synopsys' future direction and potentially reinforce investor confidence. The stock is rated a strong buy with 10 unanimous buy ratings. The average price target comes in at $630 for an upside of about 9%. And looking at our most recent ratings here, on the low end, we do have a buy rating from January, which we've already surpassed the price target. So it's a downside of nearly 3%. And on the high end, we have a more recent rating here from KeyBank with an upside of 17%. And third on our list is Taiwan Semiconductor. They trade under the ticker TSM and are currently priced at $128 per share. They've grown about 47% in the past year and 32% in the last 3 months. They score a 10 out of 10 on the TipRanks Smart Score. Taiwan Semiconductor is the world's largest dedicated chip manufacturer. They have a dominant market share of nearly 60%, and in 2023 they manufactured just shy of 12,000 different products. And while a lot of focus has been put on artificial intelligence chips, Taiwan Semiconductor also manufactures semiconductors for a lot of other high-growth end markets like high-powered computing, automotive market, and Internet of Things devices. Just last week, the company celebrated the opening of their first plant in Japan. This is part of the company's global expansion, and the new JASM site is expected to offer a total production capacity of more than 100,000 12-inch wafers per month. On top of that, Japan said they'll give the company up to $4.86 billion in subsidies to help them build a second chip fabrication plant as well. The company reported their Q4 earnings report back in January on the 18th. They did have an earnings beat, but revenue did decline slightly year over year. For their fourth quarter, they reported earnings per share of $1.46, coming in 7 cents ahead of estimates. And fourth quarter revenue was $19.62 billion, and that decreased 1.5% year over year, but did grow over 13% from the previous quarter. And following that quarterly report, we did hear from one analyst at Barclays. They commented that Taiwan Semi positively surprised with revenue guidance for the year, driven by their high-performance computing division, but the whole business will grow and they expect the industry will too. The firm says that artificial intelligence demand continues to rise. The stock does just have 5 current analyst ratings, but they all come in with a buy. The average price target comes in at $140 for an upside potential of 9%, but we do have a wide spread of price targets here. On the low end, we do have a buy rating from back in November with a downside of about 3%, and on the high end, we have a price target from TD Cowen with an upside of 43%. So that is a quick look at 3 companies other than Nvidia that are set to gain from the AI revolution. Let me know your thoughts on these companies in the comments down below, and what other AI stocks have you excited? I know there's a lot of great options out there. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own due diligence and research. Thanks so much for watching. Have a great day, and I'll see you back here next time.